Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update, and we're really going to be looking at yesterday's events, the effect that they had on the markets. We know that we do now have, from I think 9.1 was the high for the US CPI, a trending down inflation, a trending down CPI. This is showing, or certainly from a monetary policy point of view, that what the Fed is doing is working. And I think this has sort of brought back this whole narrative of a soft landing ahead, and that the Fed, once they return inflation down to 2%, which is their target, which they see met next year or the year coming 2023, they will take their foot off the gas and they can go back to stimulating the markets again. Now, I do not believe that that is going to be how it plays out. I think there's going to be a Lehman's moment coming very soon. And I think that this is still nothing more than a relief rally. However, this is a rally that we really called for. And we said, look, you're playing Russian roulette betting on this from down here. We said, well, we didn't really call for it, I guess, but we certainly looked at it and said, look, you may make your way up here. And actually, yesterday, we looked at the CPI and the possible outcomes in my video. We gave you JP Morgan's forecast for if you got this CPI print, this is what the S&P would do, and you could kind of relate that to the crypto market. We did look at this as a possibility on the CPI, and we've had the first part of this. Do we then get the second part? Is this just a setup moving into the FOMC tonight, which is where the Fed will likely do a 50 basis point interest rate hike? The ECB are also set to do a similar thing. Is this just a setup for further downside and continuation? You are very much at resistance here. The key sort of element, I guess, is going to be, do you clear this or not? So you're currently here. You may form some sort of a double top and get a deeper retracement before coming back up and looking to hold it and then come to clear these levels. Or this is the problem with trying to long this market right now. There could be some sort of capitulatory news. There could be some sort of bad news that comes out that causes, of course, markets to just come back down to these lows and continue lower. There's lots of FUD out there at the moment. We covered BINANCE's FUD yesterday. So we did get a 7.1 print. This was obviously a lot lower than the 7.6, which was forecast, or the 7.3, which was forecast. This is very much showing that what the Fed is doing is working. And you can see, actually, and we'll show you this because most other people wouldn't even know where to start. This is the euro dollars. We'll go for a daily. And you can see just how much it's ticked up. It has come down a bit, actually, rather surprisingly. And this, of course, is a way to monitor interest rates. So obviously when it's going down, it signals that interest rates are going up. And they currently have interest rates now priced at over 5%, 5.01%. I'm not sure why this has had such a sharp drop, actually. This is something that I've actually only just looked at with you guys, but you can see the correlation here between Bitcoin and the euro dollars. You know, you can see that you kind of get Bitcoin selling off typically before the euro dollars does. And we've just had a sell-off here for the euro dollars. Is that signaling a sell-off coming tonight for Bitcoin? Potentially, we will see. I found this an exceptionally hard market to trade, to the point where I'm actually no longer day trading it until we've got all this economic data out of the way. Just because it's so, the market is just so tethered to the other markets. And we can see, actually, let's take a look at some of the other markets before we go on with this video. We can see, for example, the S&P. We'd looked at the fact that Morgan Stanley had called a top on the S&P. You are now very much, again, at this resistance. So is this some sort of a double top situation? Potentially, or are you going to break out and look for higher prices, you know, maybe coming up into this zone? This would be max pain, I think, for both the bears and the bulls, because the inevitability, I think, is that we do get that Lehman's moment and see these lows ran. And this would get people back into markets, bullish, ready to take money off them. And this is unfortunately how the game of investing and trading works, guys. It's a very vicious one, but you need to know the nature of the beast that you are dealing with. So we'll see what comes. You know, I feel like there's been a lot of very harsh pricing in regards to people. Markets are the biggest drama queens out there. People have very much overshot their expectations. The dollar, for example, was definitely due a pullback, but even I did not think the dollar would pull back to this degree. Didn't envision it one bit. We've been very much a dollar bull, and I still am dollar bullish. I still think the dollar will reassert. I just think that it's going to take a little bit longer, and the dollar really ran away because of a lack of interest rates from other countries and higher inflation in other countries like the UK, like the Eurozone, for example. But we now see even UK inflation, which we have these stats today, actually easing. This is, of course, going to affect monetary policy, and hopefully what markets are looking at is bringing in more of an easy monetary policy, more of a, what's the right word here? More of a beneficial to markets monetary policy moving forwards. So that's really what we're looking at. This is kind of, we'll see what happens. We'll see what the Fed say. The Fed, I think, are still going to have to be very tough on inflation. Consumer prices rose less than expected in November, up 7.1 from a year ago. The consumer price index rose just 0.1 from the previous months, an increase of 7.1 from a year ago, compared with the retrospective estimates of 0.3 or 7.3. Core CPI rose, but essentially was less than what was expected. And the Fed are going to take this as their a victory lap, if you will. They're going to take this very much as what they've been doing is working. And you can see, other than the euro dollars, which we've just looked at, if we look at the 30-day Federal Fund futures, you can see actually yesterday, where are we? There was a real price, a downward pricing for this. So they're actually pricing in less interest rates. There's an up move going into it and then a down price. So I'm going to have a little look at this, certainly the euro dollars, because that's quite interesting that they're now pricing in more aggressive rates. So maybe this is the precursor for what's coming later on today with the FOMC meeting. Maybe they surprise markets. A 50 basis points, I think, is very much a given. But they are potentially looking, there is the possibility of a 25 or even a 75. But 50 is very much a given. Remember, it's still a tightening cycle. It's still very much negative for markets. But what's going on with this sort of rally? Why did Bitcoin do what we had kind of envisioned for it? Well, it's because essentially markets are liquidity junkies, and what they're doing is continuously adjusting to where they think the Fed's going to go and what sort of restriction this is going to have on liquidity. It's also very common. We don't need a 5-minute chart. That when you actually pop out, or if you do pop out the top of a rising wedge, that it may signal downside a little bit later on. It's quite common that you actually do get this. This strength is obviously not to be underestimated. I just can't help but feel like markets are getting set up for significantly lower lows. I just feel like, one of the reasons we flipped bullish here on the short term, remember short term for me is 3 to 4 weeks, was because everybody was too bearish. I think, and we've always said this rally would make sense because it would put people on the other side, the wrong side of the market, ready to take them lower. So if we did end up getting to these sort of levels, people would be bullish. The narrative would probably continue to be, okay, inflation's coming down, the Fed don't have to do any more hikes, they're actually going to start reducing, even though I'm telling you that where they are now is unsustainable and actually very detrimental. This would see, I believe, a lot of pain for a lot of people as they flip bullish here, only to get that downside, event or whatever it is, really take a lot of money off them. We're also seeing mortgage demand inching higher as interest rates move lower. So the pricing for interest rates, they're obviously constantly adjusting. Now the banks that are forward-looking, like markets, are saying, okay, well, we don't need to be as aggressive. We can take a little bit of, we don't have to set our interest rate so high because we don't think the Fed's going to be, or the Fed funds rate's going to be as high. This, of course, has spiked, but we had a record low mortgage demand. And then, of course, we've got lots of articles coming out saying the decade ahead will be great for investing, but we'll need to wait 12 months for it first. And this is a CIO essentially coming out, Bill Smead. I agree with him. I'm not sure we have to wait 12 months. I think what's going to happen, again, this is my sort of scenario forecast, is that we see a real sharp capitulation. And then we can essentially look for upside on the back end of that. So we will see. Currently, like I say, not really doing a lot of day trading until we got all this economic data out of the way, just because it's just so volatile, guys, that I on a 15.5, it's very hard for me to risk manage. And often you get that sort of heart monitor like price action, which we kind of saw yesterday, but we will see. You know, it's never been out of the realms of possibility that what happened yesterday was going to happen. The question is for me, it's all about, you know, any rally that we get, is it going to be sustained? The very simple answer for me is no, because the conditions don't dictate it. And that means that markets are going to continue to bleed and find lower prices until something does actually change, rather than people speculating on a change that may or may not come down the road. So today's going to be extremely significant. We've got, like I say, Jerome Powell speaking today, looking to do a 50 basis points, so a 0.5% interest rate hike. And we'll see what his tone is. You know, he may be a little bit more pleasant about, or a little bit more dovish about the whole situation. That may see further benefits to markets, or further upside for markets. But again, guys, I just want to make sure this is absolutely clear. In my opinion, and I may be wrong, this shitstorm is not over yet. All I've got for you in this video, guys, you enjoyed the content, like, always appreciate it, so as a comment, and I'll catch you all in the next YouTube video. Thanks a lot for watching, ladies and gents.